Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. Where have all the men gone? According to new data, prime working age American men are dropping out of the labor force. They're not in school, they're not working, they're not looking for a job, they are doing nothing. So says the Bureau of Labor Statistics in a new report saying roughly 7 million prime working age American men, such ages 25 to 54, have essentially given up. That comes to almost 11% of prime age men. If you add unemployed men, it's closer to 1 in 7. For comparison, in 1954, just 1 in 40 prime age men were doing nothing. Now it is 1 in 7. The collapse is worst among men without a college degree, blue collars, who have been savaged by government destroying manufacturing with environmental and other regulations and mandates, along with sweetheart trade deals that give Wall Street, pharma, and Hollywood privileged access to other countries in return for selling American manufacturing down the river. As one Brookings scholar put it in the article, quote, "They used to graduate with a high school education and have good, stable jobs, but now their towns have become ghost lands." Of course, it probably didn't help importing 10 million illegals, 10 million plus, who, as I mentioned in a recent video, have replaced native-born workers working cheap, paying no tax, it's all under the table, and sending the rest back home. So what's next? Washington has spent decades gutting America's blue-collar workers. Of course, it's been a bipartisan affair, a uniparty project, if you will, with Democrats and Republicans united to sell the family jewels in trade deals and deliver dirt-cheap workers for their donors. Trump and Vance have, to their credit, been sounding the alarm for years now. Alas, they are up against the uniparty. So China ends up getting blamed for the uniparty destruction. I mean, China's ruthless, as are we. But the destruction of blue-collar workers was made in Washington, with politicians, donors, activists, and unions uniting as one to make it all but impossible to produce anything in America. The metaphor I like is we salted our fields, and then when people try to buy from the neighbors, we want to salt their fields too. So maybe we should stop doing that. As for what's next, if Trump wins, tariffs and deportations will, at best, buy time. What's needed to reverse the blue-collar collapse is a wholesale retreat of Washington from micromanaging American manufacturing, energy, and blue-collar production into oblivion. Trump had a very good start cutting red tape. He repealed, it turned out, 7 regulations for every new one, and he cut business and income taxes, which give production less reason to leave. Still, it was window dressing compared to the scale of the problem. I mentioned in a recent video that per-worker regulations in manufacturing literally cost more than the salary, while environmental ruses wipe out entire industries, farmers being the next front. Changing this won't be simple because special interests spent a lot of money buying it, and they'll spend a lot of money defending it. Democrats will deploy lawfare as they did under Trump, serving big business who quite likes cheap Chinese stuff and the market access they get in return. And of course, they don't actually have to live in those ghost towns left behind. So even if Trump wins, it's moving a mountain, and if, God forbid, Cackles wins, in that case, expect great swaths of our beautiful republic to become yet more ghostlands. Inflation is rising again, and even Fed cheerleader Bloomberg is worried the Fed is losing the battle. Inflation rising is awkward for the Fed, given Jerome Powell already cut rates for the looming recession. In fact, he just did a jumbo half-point cut, which makes inflation go up. This is known as a policy error, and the Fed's been making a lot these days. So in raw numbers, CPI surprised on the upside at around 2.2% annualized, but the bombshell was so-called core CPI, which strips out food and energy. That came in at nearly 4% annualized. Prices rose across the board. Groceries were up the most since the beginning of the year, with meat up over 10% annualized. Car prices, new and used, car insurance, medical costs, and plane tickets all jumped. Services as a whole jumped nearly 5% annualized. Interestingly, watches and jewelry jumped at an 84% annualized rate in the CPI, perhaps as a flight from paper money to real assets, or perhaps because senators got big donations this election and need to keep their mistresses happy. Meanwhile, eggs, which is how the rest of us keep our wives happy, jumped 8.4% annualized. So none of this is supposed to be happening at this stage of their game. I mentioned in a recent video how recessions tend to reduce inflation, in fact, by 3.7% on average over the last 40 years. So if we're bumping along at 4 core with a recession coming, it suggests that underlying inflation could be 7% plus, which would make it very dumb for Jerome Powell to have just cut rates by a jumbo half point with more cuts on deck. Just another month in the Federal Reserve clown car. Now, to be fair, Jay Powell did admit last year how they have no idea what they're doing. He phrased it as the Fed is navigating by star on a cloudy night, as in navigating by stars you can't see, which is not navigating, is pretending to navigate, which pretty much sums up the Federal Reserve, in fact, central banks in general. They pretend to manage the economy, but really all they do is print as much money as possible, which causes inflation and then recessions, and then they try to balance the two to keep headlines manageable. A little pain here, inflation, a little pain there, recession, with the people not realizing the Fed caused both. So what's next? If prices are rising, the Fed's room for error just got a lot tighter. Markets can see this with the odds of another mega cut dropping to zero for the Fed's next meeting and mortgage rates rising again since higher interest rates mean expensive mortgages. That means we could be stuck with 7% mortgages in a frozen housing market well into next year. More important, these were not good numbers for Kamala Harris because this was the very last inflation report for Kamala before she faces voters. With a core inflation near 4%, Kamala is facing voters with a looming recession, rising joblessness, and now rising inflation, which rhymes with Jimmy Carter, who famously won just 6 states against Ronald Reagan in 1980 after Carter, too, delivered inflation and recession. Now, Kamala will not win 6 states. Our media is even less objective than it was in the 1970s, but rising inflation with a slowing economy is pretty much the worst possible way to fight an election. Of course, if Trump does win next month, you can take it to the bank that the media will put both the Biden-Harris inflation and the Biden-Harris recession on Trump. A word from our lead sponsor, Unchained.com. An IRA is an investment vehicle that can save you a lot of taxes. With Unchained, you can hold real Bitcoin in your IRA, and it's the only company where you hold the keys and can verify that your Bitcoin is not being relent like banks do. We've recently seen futures-based ETFs underperform holding your own Bitcoin, so why settle for less? Sign up today at unchained.com/Bitcoin-IRA. Are you tired of your gold and silver collecting dust? Well, you can earn between 5 and 12% interest on your physical gold and silver with Monetary Metals. For the last 8 years, Monetary Metals have been offering passive income on your gold and silver paid in more physical ounces. They're run by trusted folks who've been passionate champions of liberty for decades, and you can earn up to 5% in their gold and silver leases, while accredited investors can earn up to 12% interest in their current silver bond offering. Check out monetary-metals.com/Peter to learn more about putting your precious metals to work today. Now back to our show. Japan just fired their stunningly unpopular prime minister, replacing him with a new guy who in just a few short months will be just as stunningly unpopular. Why? Because Japan has gone so far down the government spending path that its political system is no longer serving the people, it is serving the debt. In other words, they're backed into a corner of debt. Now, you may recall last June at the G7 meeting of the US, Canada, Japan, and a bunch of Europeans, the one where Biden wandered off and everybody followed him to cover his butt. Well, something else fun out of that G7 was the memes listing all of the leaders' approval ratings. And it was pretty bad. Joe Biden was sporting a negative 19, as in many more voters disapprove than approve. As bad as Joe was, it went downhill fast. France's Macron had a minus 31. Canada's Trudeau was negative 38. Japan was negative 40. Britain and Germany were actually below minus 50. Chlamydia probably polls better in Britain and Germany. Of course, this all begs how so-called liberal democracies got so corrupt they anoint leaders the people overwhelmingly reject. I mean, isn't that the whole point of democracy? Still, no leader is forever, even bad ones, and this week it is Japan's turn as the spectacularly unpopular Kishida stepped down in the face of approval ratings of 15%, that's 1-5. So why are Japanese upset? The immediate reason was a corruption scandal, but then pretty much everybody is corrupt in Japanese politics. suggesting the real reason is because the Japanese government has proved utterly incapable of stabilizing the economy and public finances, which is endangering the national pension system, even as taxes and debt keep mounting. To the point, Japan's uniparty is importing 800,000 unskilled laborers to prop up national pensions. I know, even Japan. So the useless Kishida had to go. Unfortunately, they swapped in a guy who's been in politics for 40 years, whose main selling point is he's a calming choice for the geriatrics who mismanage Japan's economy. So will the new guy change anything? In short, no, because Japan's economic policy is at this point largely out of its hands. Thanks to levels of debt that are truly epic, in U.S. terms, Japan would have a national debt of over $70 trillion, rising at $1.6 trillion per year. And so Japan has become an effective debt colony. To illustrate what this has done to Japanese politics, the new guy Ishiba came in with big talk about normalizing interest rates, strengthening the yen, cutting spending, and Japan taking on more of its defense, since after all, it's a grown-up country. Alas, all of that evaporated overnight, with Ishiba sheepishly admitting it's just more of the same. Because as bad as the Japanese economy is for the people of Japan, the special interests, so Japan's banks, construction companies, and big exporters, are all perfectly comfortable with the way things are, with trillion-dollar deficits, zero interest rates that impoverish Japanese savers, and yes, with Uncle Sucker paying for Japan's defense. So what's next? What's happening in Japan is happening across the West. We're maybe 10 or 15 years behind. And in Japan as the West, turning it around would take radical change, slashing government spending, slashing the scope and scale of government to free up entrepreneurship. Of course, given this all goes against deep-pocketed donors, in Japan as in the West, these are choices that may be necessary, but in the absence of a Trump-like disruptor, will be delayed as long as possible. If it feels like a recession, you are not alone, because according to a new study from the Brownstone Institute, authored by myself and my very based colleague E.J. Antoni, if you measure inflation correctly, turns out the U.S. economy has actually been in recession since 2022, as in during most of the Biden-Harris abomination or administration. In the study, we made several pretty obvious adjustments to the deceptive way official statistics calculate inflation. Together, these nearly double inflation during Biden-Harris, taking it from 20.9% in the official so-called GDP deflator to 39.9%. 39.9 incidentally matches nearly perfectly the rise in fast food prices. I mentioned in previous videos how the Big Mac is a gold standard metric in foreign exchange markets where government statistics are unreliable. So what were our adjustments? The biggest is housing. Official statistics don't measure the cost of owning a house, which is the mortgage times the interest rate plus property taxes, insurance, and down payments. Instead, they use a convoluted lagged indicator based on rent, almost like they're trying to hide it. Housing is a quarter of inflation, so this is a big deal. And given house prices went up by more than 40%, while mortgages rates have nearly tripled, it is a very large number. Second is something called hedonic adjustment, where government statisticians reduce the price of a product if they think it got better. There's a particular problem with regulation, which of course they always assume was worth it. So if your energy bill doubled because they mandated windmills, they could say global warming is so important that adjusted for quality, your energy bills went down because you got the electricity plus the climate change. Cute, right? A third adjustment is something called indirect purchase, where they don't even bother measuring price. They use some proxy. For example, in health insurance, they take the profits and assume rising profits mean higher prices. Of course, this makes no sense because there could be many reasons that profits change, maybe government lobbying, expensive hospital inputs, perhaps a mandated vaccine that is not selling anymore. Taking them all, housing, hedonics, and indirect, it turns out that official numbers underestimated inflation by roughly half. Now comes the kicker, because both income and GDP are calculated after inflation. Real. Meaning if you miscounted inflation, you miscounted growth by a lot. Running the numbers, that means income growth over the past 5 years has not been 13% like official statistics say, it's been minus 2.3%. While GDP, the sum of goods and services that make up the economy, goes from a respectable 13.7 under Biden to a drop of 2.5. Keep in mind, since 2019, the American population grew by 7 million plus illegals. So we're producing less, we're earning less, and there's more of us. Now, if incomes and GDP have actually fallen by 2.5% over the past 5 years, for perspective, that's about half the decline of the 2008 crisis. In other words, the Biden miracle flips to a half-speed 2008 crisis, all in an alleged booming economy. So what's next? For years now, the media has been lecturing the American people how the economy's on fire, in a good way, but they are just too dumb to see it. Well, it turns out the American people were right to believe what they see, not what they were told. A word from our sponsor, Daily Signal. If you're looking for a podcast that cuts through the noise and delivers honest, truthful, and conservative perspectives, check out the Daily Signal podcast. Each weekday, they bring you interviews with policymakers on the issues that matter most, from breaking down complex legislation to exposing media bias. They are committed to giving you the facts you won't hear from the establishment media. Subscribe now to the Daily Signal podcast on Apple Podcasts, Spotify, or wherever you listen. This podcast is supported by Money Metals, home to the newest and largest precious metals depository in North America. It is twice the size of Fort Knox. For 15 years, Money Metals is the trusted choice for buying, selling, and storing gold and silver. They're known for competitive pricing, great service, fast delivery, and unparalleled security. They're also a top news and education hub on the gold and silver markets, and they play a leading role in public policy battles for sound money legislation at the state and federal level nationwide. Protect yourself against inflation and uncertainty. Visit moneymetals.com to explore their range of services supporting precious metals investors. That's moneymetals.com. Now back to our show. How do you protect yourself when your government turns on you? Authoritarianism is back across the West, from Europe to the Biden-Harris censorship regime that would fit perfectly in communist China. I think many of us were surprised during COVID to realize just what the supposedly liberal West has become. Of course, it was decades in the making. COVID just showed their cards, and for better or worse, this has happened many times in history. Authoritarianism is kind of the human default. It's the state of nature, the original state. Humanity has a lot of experience with authoritarianism, so how did people protect themselves last time? Probably the most relatable episode is World War II, and that really depended where you are and how far along the path your country had gone. So if you were in New York, you adjusted your stock portfolio. If you were in Britain, you moved to the countryside and stockpiled canned food. If you were in Switzerland, you packed a go bag in case the German army decides to fill in the map. And if you were in Germany, of course, the only plan was get the heck out. The problem is knowing when to pull each trigger, when you adjust the portfolio, buy the canned goods, pack the go bag, when do you get the heck out? And each of these preparations has a cost. Now, the more successful you are, the more embedded you are in your country, the higher those costs go. So moving your family, your business, your portfolio, converting your career to location dependent. Now, people ask, why didn't people leave Berlin before it was too late? And those costs are why. But there's a silver lining to this, which is that means the vast majority of us will stay and fight. In fact, the people with the most to lose, the natural elite, are the most likely to stay. For example, in every election since George W., we've been treated to Hollywood liberals threatening to leave the country. You never hear influential conservatives saying that. We will stay. And stay we should, because I know I've made this point in other videos, but we are going to win. They're overextended, they've completely lost touch with the people, and democracy is coming for them. We were already seeing it with Trump surging in the polls. Canada's probably on deck for next year, and even some European countries are electing populists. But even more important than tactical, like this election or the next couple of years, if you zoom out, rarely in history has liberty had so many advantages, thanks to the internet with a big assist from Elon Musk. So liberty starts out with the advantage that man is not by nature a slave. Slavery being an unstable equilibrium, it is fragile, it's just waiting for the right push. But this is up against the natural advantage of authoritarianism, which is that it has the money, and money buys guns. It has the money because it seizes half of what you earn and uses it against you, and then it prints up what else it needs at the central bank. Then it uses that money to control the levers of society, education, and media to finance, which we saw in living color during COVID. So we have the numbers, they have the money. So what's next? If it's a question of numbers versus money, we are absolutely winning. In the 1970s, Murray Rothbard said you could fit the entire liberty movement in a New York living room. Now there are billions of us. So forget a living room, we couldn't fit in a state. Meanwhile, their advantage, money, is collapsing before our eyes in crippling debt, nervous financial markets, and the limits of inflationary printing. In short, we are getting stronger, they are getting weaker. And the longer it takes, the more spectacular will be the victory. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersanons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.